Welcome to today's market report. European stock markets pushed higher today amid signs the region was returning more towards normalcy despite an ever-rising number of COVID-19 cases elsewhere. At 8:30 this morning, the DAX in Germany traded 0.6% higher, France's CAC 40 rose 1%, and the UK's FTSE index was up 1.1%. The Eurozone is probably past the worst of the economic crisis caused by the coronavirus pandemic, European Central Bank President Christine Lagarde said on Friday, while urging authorities to prepare for a possible second wave. We are probably past the lowest point, and I say that with some trepidation because, of course, there could be a severe second wave, Lagarde told an online event. The US, the world's economic driver, has posted a record number of new coronavirus cases, with state health departments reporting a total of over 37,000 new cases on Thursday. In fact, Texas was forced to pause its reopening, with Houston's intensive care wards reaching capacity. Britain announced Friday that it is working on a plan to relax its quarantine for international travellers, with some countries where there is a lower risk of contracting the novel coronavirus. This has helped some of the airline stocks that were critical of the original move. EasyJet rose 2.4%, IAG, which owns British Airways, rose 2.8%, and Ryanair climbed 1.2%. Air France KLM also jumped 5% after governments of France and Netherlands reached a deal on an aid package for the airline group, with the latter saying it would provide a €3.4 billion financing package. On the FX front, GBP USD is down 0.11% on the day to 124.05 as the pair displays bearish signs. Furthermore, Friday's 4-hour chart is showing that momentum has turned to the downside. FXStreet reports OCBC Bank expects the cable to break below the range 124 to 124.50 to look for the 123.30 level. According to the UOB group, the pair GBP USD still looks range-bound near term and expected to extend the consolidation for the time being. EUR USD struggles for direction just above 112. Alternating risk trends continue to look to the coronavirus developments. A combination of factors such as plans to joint debt issuance, German fiscal expansion, and the extension of the ECB PEPP programs call for medium Run EUR bullishness, according to CIBC Capital Markets. The ECB Governing Council member Olli Rehn was out with some comments in the last hour and said that the danger of deflation has re-emerged. Policy actions by the ECB are necessary and proportionate, Rehn added further. Meanwhile, the shared currency picked up some pace in the last hour and has now lifted the EUR USD pair to fresh session tops around 112.30 region. The dollar has maintained its strong tone in early European trade Friday, with traders seeking out the safe haven as the number of coronavirus cases in the US continue to grow. At 8 o'clock this morning, the dollar index, which tracks the greenback against a basket of 6 other currencies, was up 0.1% at 97.420. According to ING, with data likely to play second fiddle to the virus headlines, investors are likely to remain rather jittery today, with the balance of risks for pro-cyclical assets titled to the downside, and the dollar may remain supported on safe haven bids. Economic data pointed to an economic recovery in the US Thursday, with another small drop in jobless claims and a substantial rise in durable goods orders. Friday offers up spending data as well as Michigan sentiment numbers. Again, according to ING, there is a growing concern that new restrictive measures will be deployed. In turn, while we maintain a positive medium-term view on risk assets, it will mostly be about infection numbers that drive sentiment in the short term. That said, the second virus wave no longer appears to be a US-only story. The development in EM developing countries continues to be problematic for their recoveries and not least tourism. It is hard to see things get much better until we get to a vaccine, which so far is still on track to arrive within 6 to 9 months, according to Danske Bank in a research note. In Poland, the first round of the presidential election is set to be held on Sunday, and Polish zloty weakened with USD PLN traded 0.1% higher at 3.9712. This is today's market news. Thanks for listening. We'll see you next time.